Okay, hello everybody, and welcome to Investing with IBD for August 28th, 2019. I'm your host, Arusha Pierce, and with me today is Howard Lindzon. He's a serial entrepreneur and the co-founder of StockTwits. Thanks for being here, Howard.
And I like cereal.
And he likes cereal. On today's podcast, we are going to talk about the current markets, the importance of managing your weaknesses, and current stocks. But before we get into that, Howard, let's go over a little bit of your background. Now, we know you already like cereal, but how did you get into investing?
I was born and raised in Toronto. I think my parents gave me a little money because I remember losing it on a stock called Clearly Canadian,
Okay.
which was the La Croix of like the 80s in Canada.
Wow.
So it was. I wasn't a millennial, but I lost my ass in La Croix. It was called Clearly Canadian. It was a hot stock, I think, on the Vancouver Stock Exchange. I don't even know if there was a NASDAQ back then because I was living in Toronto, and I think I lost about $6,000 of about a $6,500 account.
Okay. That's not good.
And it just infuriated me to the point that I probably stopped investing for 10 years and finished school and then ended up back in the market 10 years later.
Okay, and what inspired you to get back in after that time?
I needed a job, and the 87. So this is a funny story. Graduated from college in 87, and went to work in Toronto because I didn't want to be in the stock market, but I needed a job from my undergraduate degree.
Yeah.
And I went to work in Toronto for a company called Davidson Partners in the wire room. And back in the wire room in those days, orders came in on a little bubble tube. And about 1 month into my job, the stock market crashed.
Oh, wow, that's perfect timing.
And I remember all the tubes backing up. I didn't know what the hell was going on. Usually it would be like a couple of orders an hour, and then it was just a mass confusion in the office and people trying to clamor to get into the mail room.
Wow.
And none of them ladies, obviously. And I was let go, last in, first out inventory of human meat. I was let go a couple of weeks later, and the firm was shut down. And I should have bought that dip, I guess, but I didn't know what buying the dip meant back then. So I went back to school.
Okay.
Yeah.
And so now you've been investing in the markets for 35 years now, and you ran a hedge fund for 20 years.
Yeah. I graduated with an MBA from ASU. I moved out to the States, chasing the sun and the good weather. We had grown up with a home in Arizona, and I loved the desert, loved just the whole vibe of living in the desert. And went to Arizona State. I was a Canadian, so I wasn't a legal pre-Trump, so there was a chance that I could stay in the country. And am I allowed to say anything anti-Trump on this network? So it was I didn't have a green card or anything, and so I applied for a job. And it was a stockbroker job, and that was just before the '90 recession.
Yeah.
And the S&L crisis. At the center of that was like my hometown in Phoenix. So I was like 0 for 9 in the market by this time.
Wow.
And but I was just so fascinated by how things worked and like panics and recessions, and so every experience I had with the market was going to zero. And but I had a great mentor in the brokerage business, and he taught me how to sell, and I just was fascinated by picking stocks. And I think Starbucks was going public at the time, and Blockbuster Video, like 90, 91.
Yeah.
And those were the internet kind of stocks of the day.
Yeah.
And I just got hooked, and technology was just starting. Intel, the 386 processor probably. And I just got in at the right time and fell in love with the stock market.
And so how did your investing strategy evolve during those times where maybe in the beginning you were buying more just on companies, but it eventually evolved into relative strength, into charts. How did that process happen?
Yeah, so the big issue was there was no first of all, I didn't have money, so my job was to sell.
Yeah,
I was a good sales. And back then you had to call. You couldn't go to LinkedIn or use social web and build your brand. You were just smiling and dialing, and so that was a game in a way.
right.
And and you had to build your clientele. So it was not about me buying stocks. It was about me figuring out how to sell stocks.
Yeah,
And I loved it. But it also wore me the hell out.
Yeah.
And just met a few friends and decided to switch sides and get on the buy side. And I was an entrepreneur, and if you're going to be an entrepreneur and love stocks, there was you could start a hedge fund. And at the time, everybody was starting. It seemed like a bubble, no different than everybody starting a venture capital fund today in 2019. In 86, 87, it was like, that's what you did, start a hedge fund. So everybody's like, oh, it's a bubble. If Howard's starting a hedge fund, it's a bubble. But I had no real experience.
Yeah.
And but I had a lot of wealthy friends that trusted me over the years of selling, and they said, go at it. And it led me on a 20-year miserable path of trying to beat the markets. And with no real experience, just the trust of your friends,
right?
And no money for Bloomberg, and I wasn't a news guy. I was just out in the dark trying to figure out how to beat the S&P. And beating the S&P back then wasn't like it is now. Like, it wasn't about beating the S&P. It was just about making your 2 and 20 and trying to just do well.
Yeah.
But I discovered Investors Business Daily. It became kind of my Bible, and it just resonated with me that good companies would show up with high relative strength, and you just started to recognize that good momentum begets more momentum, and it just became the strategy that always made sense to me. So I've been a relative strength IBD 50 Market Smith fan from the day one that I discovered it.
Perfect. Now, and then you eventually started a company, Wall Strip, and
yes.
And how long did you do that? That was around 2006, 2005.
Yeah, let me just have a drink here. So this is when I started drinking, when I got on the internet. So it's 2000. So you imagine me like you hardly know me, but imagine me I didn't have a big hedge fund. I was under 100 million, I believe. I got to be honest. I was more about preserving capital. No one was really watching me. I was more about preserving capital than taking risk and learning. So my LPs had basically paid for my education, and they were paying. And I just I hated what I was doing. I hated the stress of trying to beat the market. We'd gone through now the Japanese, the long-term capital management in '88, and you'd gone through Asian contagion, and then you'd gone through the bubble of the internet,
right?
And it made so many, just surviving in 2000. By 2005, I'm like, I can't even believe I'm doing this.
Just worn out at that point.
I was a terrible person. You're always trying to beat the market, and over what? Like helping people, beat the indexes. And I hated CNBC. Just hated it. And that's what resonated with me. I just hate. Yeah, the only thing I needed was my IBD and a couple smart friends, and that was my world. And so the internet comes along, and YouTube comes along in 2005, and I'm like, it was all cat videos, and I don't even like cats, but I was really addicted to YouTube. I'm a dog guy, and I'm like, I'm going to create CNBC on YouTube. That was the brainstorm that I had. And you can tell I spent a lot of time by myself. And I called some venture capitalists, cold called some venture capitalists, raised $600,000, and started a show called Wall Strip. It was a 3-minute. It was the first professionally produced non-cat video show on YouTube.
Wow.
And it was about one stock a day at an all-time high called Wall Strip. And it was kind of based on stocks at all-time highs tend to stay at all-time highs. And the first show was Apple. It became like a smash hit from day one. and CBS acquired. We were the first show ever acquired. So I went from a tiny room by myself, and it was the first show ever acquired by a major network off the internet. So that's my claim to fame on Wikipedia.
Yeah. Wow. And then after that, after CBS acquired Wall Strip, a few years later,
I go, who the hell's Howard Lindzon and why is he working here? Because they realized what the hell they had done, and they wanted to fire me after about 2 days. I was like Clarence Beeks of CBS.
Wow.
And but I lasted 18 months, and during that time, Twitter had become I recognized Twitter becoming a phenomenon. The first time I saw Twitter, I go, this is dumb. The 10th time I saw Twitter, I go, this is dumb. But the 100th time when I set it up, I go, this is going to disrupt Bloomberg. Wrote a blog post about how Twitter is the next Bloomberg, and started StockTwits. I negotiated out of my non-compete with CBS and started StockTwits, which was basically the idea of Twitter for stocks. And we invented the $, which is now the cash tag, as a way to search on Twitter to find people talking about stocks. And 12 years later, StockTwits is probably the largest social network for stocks.
Yeah, no, it's perfect. And so many people have learned.
Obviously, Twitter is bigger, but it's not a stock-focused site.
Right, and so many people have learned through StockTwits and really gone through that learning curve a lot quicker than I was able to 20 years ago.
So IBD was my Peloton. I call it a Peloton, right?
Perfect.
The charts were my Peloton. That's what I call it. Just to get this point across, you watch the Tour de France. I'm a cyclist. You watch the Tour de France, and I'm fascinated by like how that Peloton works. Like, you go, how do they do that race? 21 days in the mountains, blah blah blah. But really, 70% of it, they're in a Peloton, and they're going 40% faster than they could by themselves. And that really applies to every industry, whether it's birds or whether it's people following each other. Obviously, in the stock market with so many people, you got to be careful who you're following. But once you build a strong Peloton, whether it's data or whether it's people, you can block the rest of the noise out. And so that's what Twitter was to me. And that's what StockTwits became even more fine-tuned. And that's what we're speeding people's education up. You can give people a couple website, IBD and StockTwits, and they go great together.
Yeah, perfect. And so after that with StockTwits, I think this is a perfect way to kind of segue into the next segment where we're going to talk about you continuing to be an entrepreneur and learning from those trends. So when we come back, we will learn more from Howard and how he's using his entrepreneurial experience to pick up on latest trends, and also we will go into the current market. So stay tuned. Hey guys, Arusha from Investing with IBD here. Make sure to subscribe, rate, and review if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode. Howard Lindzon's our guest on Investing with IBD. Okay, Howard, so let's get into the current market, and then we're going to get back more into your experience here. So now the current market, it's been volatile. The IBD has it under pressure, 4 distribution days on the NASDAQ, 3 on the S&P 500. What are you seeing in this environment?
I'm seeing what you see. I read what you read. We're all seeing the same damn thing.
Yeah.
It's just a lot of people yelling, including myself. We're all yelling either at Trump or with him. What I see is a very strong U.S. economy and low interest rates. But like you said, the data is tippy. Like, there's a lot of stuff going on under the surface, and I wouldn't be shocked if we tip down. But I'm not going to. I don't short stocks anymore. I'm just too lazy, and I don't manage other people's money. So cash is my hedge, and I got a pretty high cash position. I'm 53. I have a very high amount of money in startups from my real job. Yeah. But my passion is stocks, and I'm super bullish, but I'm really on the verge of like flipping the other way and just leaning even more into cash. So I feel like our leaders are tempting the gods with the rhetoric. Yeah. And the market could get saucy.
Yeah, we're going to probably have a strong resolution one way or the other with this indecisive environment.
We're here decisively. Now you've got a lot of overhead.
Yes.
Right?
Yes.
Yeah. Like you break lower, and the restaurants are strong, and software is strong, and some biotech leadership. But so there's speculation going on, as there should be. We got 2% or 0% interest rates, but you can only huff and puff on this stuff for so long.
Right. Right. Okay, so let's get into, because this is a good segue on managing your weakness. Because one of the things that, especially when you're newer, the traders, you feel like you have to trade every day. And that is a huge weakness that I think we all learn eventually, hey, you don't have to do that. So let's go into that and how that's a pretty big weakness for traders that they need to overcome.
Yeah, I mean, my son vapes. We send him articles every day about how it's going to kill him, right? Like for a while, I thought it was cute that he vaped. Now I'm like killed my son. So I mean, like it's over. We've got these drugs all around us. Now we have Robinhood, and StockTwits is about to have a trade app, and we've taken the commission down to a phone and a click and free. I mean, are you talking? I mean, we're going to have an epidemic of trading. Right. So those that have learned to master it already are going to have a great next 10 or 20 years, because the bearish or bullish, there's millions of people that have been onboarded. 30, 40 million millennials have been trading crypto and stocks for the last 3 years on Robinhood and Coinbase. So I'm super bullish, but at the same time, kids are going to have to learn, just like they had to do with their phone and Tinder and Snapchat, to put that down and to enjoy these things for what they are. They're magnificent, and the market's a magnificent, one of the greatest achievements of aggregating people's opinions and money. It's one of the greatest things that capitalism has produced and underappreciated. And so people need to respect it, and to respect it, you need to be able to enjoy it without doing it every minute.
And when you say super bullish, you're super bullish just on the future of the stock market, right? The new participants coming in.
The alternative is to turn on the TV and give up on life.
Right.
So I'm just super bullish on, if you don't have the TV on, how can you not be bullish?
It's true.
Yeah,
it's
obviously, I'm not talking socioeconomic. Like, people have, there's problems in the world. I get it, but I'm luckily, never had those problems. So I can't force myself to have problems. I mean, I look at the world as a glass half full. Oh, glass half full is the secret word of the day. So I look at for every buyer, there's a seller, and stocks go through overvalued and undervalued periods. But in a world that we are in, that nobody knows what's going on, with all this information out there, nobody knows anything. It's fantastic.
Right. That
we're going to have the next Warren Buffett, and he's 18 years old and has a lot of tattoos and is probably drinking White Claw. But the next billionaires, and everybody thinks the markets will die with Warren Buffett. I think Warren Buffett sucks, and I don't mean sucks. I mean, like, the next Warren Buffett's going to be completely different.
Right.
And so I'm super sad. And they may make their fortunes trading sneakers and cars and rare collectibles, because. So I try to keep an open mind to all this.
And so now, with part that being super bullish is, you being an entrepreneur, you're involved in investing in companies at early stages, and you're seeing these great trends, a number of these huge trends that are happening really on the ground level. And so how's that helped you in the stock market? And first, let's probably just start off, what are you seeing?
I'm seeing listen, I'm not a geek. We laughed about how bad I am at technology, and that's the beautiful thing of this world. Technology, it's not about being able to code, and I think you have an edge if you can code, obviously, and if you went to MIT, you have an edge. That's just life. So kids, go to school and go to the right schools and learn to code, but I don't. Technology is now immersed. Like, it's hard not to be able to use this, right?
Right.
And do you really need a printer and a scanner? You can get by with your camera and your smartphone. So you are as technologically savvy as you need to be. But in the days when you and I were doing this, you had DOS, and oh my God, I didn't understand that.
Yeah.
So in the world where everybody in the world is connected, And we live in a world for now that's still very mobile, right? Like I don't like some of the policies of this is where I hate, taking away globalization. I've earned my freedom, or I'm lucky to have my freedom, and I cherish that freedom, getting on a plane and getting out of town. And millennials do too, and Generation Z expect that. So those are the black swans that that one talks about. Those are the black swans, right? The freedom to be mobile. Right? Once you've given people mobile and you take that away, that's the war. That's the nightmare. But barring that, it's not about the recession, and it's not about Trump, and it's not about a one wall. It is about the wall, but it's not about just one wall. So in this world of technology, it's just hard not to see how this doesn't keep building on itself. In the world that's connected, things are going to speed up, trends are going to happen faster, and markets are connected, and we're seeing shooting stars. The chart patterns look the same, they're just compressed,
right?
Because technology is shrinking time. So it's the same patterns over and over again, and they're just a little bit different with respect to time. And they're a little bit different now because there's less analysts in the world. And they're a little bit different because they've been fired or the banks have been shrinking. And they're a little bit different because of the speed at which they're happening and the speed at which they can be disrupted themselves.
Yep.
So these are all just different things happening.
And so some of the industries, where are you seeing some of this disruption happening? Which industries are you seeing? Like biotech or aerospace?
Disruption, it's, Mark Andreessen said it, and he said it well, and software is eating the world.
Yeah.
But it's not the only trend. As software eats the world, real estate prices will continue to go up and been good assets. So, and as software eats the world, it helps biotech companies grow faster. As software eats the world, it helps fashion companies do more things. So the underlying factor is software, right?
Mm-hmm.
We have this world totally connected, and you have analysts. Well, first of all, you have the shrinkage of analysts, and then second of all, you have new rules being developed, meaning we have not seen companies at this size because they've been able to scale so quickly. So you have, in a world with less analysts and in a world with less models, because we've never seen these models before.
Yeah.
I mean, everything's thrown out the window. So, I mean, that's what makes me bullish. All this stuff's going to have to be rethought and reimagined. And who's to say Warren Buffett understands this market? Sure, in a world without software and without network effects, value meant something, and financial metrics meant something. But in a world where everybody's connected, good luck measuring what the value of something is.
Yeah, and you're seeing this software.
The perfect example of that is Bitcoin. The perfect example of that is Bitcoin.
Right.
The volatility and the polarization that's caused is unbelievable because both sides are right. Nobody has the right answer, but it's an incredible piece of software with no employees, right? Completely open source, no overhead, no health costs, no carpal tunnel employee complaints because they've been coding. It's like Facebook without employees, and it's being built on servers that they don't have to pay for, right? Distributed.
That's pretty crazy.
It's a great argument. I have no idea, but directionally I'm bullish on a piece of software that has brand recognition at every corner of the world and may not be fast enough to transfer money for everybody yet.
Yeah.
It could be one of the greatest pieces of software of all time.
So the software, just Bitcoin and also blockchain in general as a technology.
Blockchain,
too,
right? Bitcoin is a blockchain.
Right.
Open source software, Elastic, Mongo, who knows how big these companies can get. Amazon in many ways, open sourcing. It's fascinating. It's fascinating.
So the key is software eating the world. And think about that as it applies to many industries like aerospace, genetics, or even real estate. So coming up next, what we're going to do is we are going to discuss 3 companies that are a little bit older companies, but they are continuing to innovate. They're continuing to innovate, and they also innovate with style. Stay tuned. Want to find stocks like the ones on this podcast? A lot of the best names we talk about come from IBD's exclusive stock lists, like the IBD 50 and the Big Cap 20. Whatever type of investor you are, we got a list for you. You can access every one of IBD's lists, plus stock ratings, exclusive analysis, and one-on-one coaching with a membership to IBD Digital. It costs less than $1 a day, but for podcast listeners, we're offering an even better price. Go to investors.com/podcast offer right now and get your first 2 months for only $20. We are back with Howard Lindzon. And so, Howard, let's go into some current stocks. And now, the first 3 stocks that we're going to talk about, they're part of your fashology category. I think the first thing is, let's define what fashology is.
Yeah, I coined it about 10, 12 years ago with Oakley. Oakley had opened these stores, and they had Bluetooth, Motorola headphones built into the Oakley phone. And I was like, I coined the term fashology, saying fashion meets technology, meaning you're never going to buy Motorola sunglasses, but you will buy Apple sunglasses with Motorola parts. Yeah. And so I was very bullish on Oakley, but they sold to Luxottica. I thought that was a terrible thing. It was a good deal, but that killed a great brand that was at the edge of fashology, right? Yep. And they invented this idea of, they were the AirPods before the AirPods. I mean, that company was like onto something. And so it was really disturbing to me because I was so bullish on Oakley. And then along comes Apple, and that has become the largest fashology company in the world, meaning they combine fashion, which is design, and people want to have it, and with technology. So they're the leading fashology company. I'm immensely bullish on the company. Obviously, China has a major factor for Apple. They've got, considering how crazy the markets are with respect to tariffs and how serious the issue really is, Apple's held in there magnificently. I think it's massively undervalued because of law of large numbers, and people can't get their heads around the fact that women and kids are going to be going to the Genius bars for the next 60 years, right? They figured out retail and fashion. They figured it all out. And so it's my biggest position. I trim it when it's running. It's because of law of large numbers. It's my biggest position, but I also trim it on runs and add it on 20% dips. So
Apple right now, they're forming a really big cup with handle. They broke out, came back in with the market, obviously, but it's been hanging in pretty well.
Without China, it's not going to get going without any resolution to China. Meaning, I've been trimming in and adding other stocks over the last 6 months. It's just as it runs, I trim, and if it hits all-time highs, that's a good sign, and I'd probably pile back into it.
And some of the new products that they have now, the watches is really starting to take off.
Trojan horse. Yep. It's a fantastic product. My 21-year-old daughter lived in New York this year. She couldn't wait. One of the first purchases she did with her own, her new job money was an Apple Watch. I was like, really? And women love this product. They use it for different reasons, not to check Tinder or use the phone. It's to compete around fitness and little cute things that they do that the phone does, and stuff that I don't care about. But and the AirPods. The AirPods are a magnificent piece of fashology. Yep.
And now the credit card too, right? They just released the credit card, which is a stylish.
They just have a lock-in that people don't understand. It's fun to hate Apple because they're so big. I get it. But, the fact that Steve Jobs passed, and it's been, 8, 10 years, and they can still execute at this level, it's an amazing company. And everybody's copying it. Like, everybody would like to be Apple.
That's true.
So, I mean,
that's true.
It's.
Let's go to the second stock, and this is Nike. Right, and another company that's been around. They have such a strong brand name, and it's not just U.S. Half their sales are international these days, and they're part of this whole. It's fashionable, athletic. The other category that people always coin is the athleisure category, which is the same
I hate
thing.
That word.
Oh, you hate that word? Okay, we won't say that. We'll say fashology again then.
So let them call it athleisure. I don't follow people that call it athleisure. That's terrible. That's like people in terry cloth robes. That's Leisure Suit Larry when I was a kid. So this is about fashion and technology. And Nike does a fantastic job. They're a fashion company, but they're on the edge always of technology. They've made a few mistakes around digital they're just not a great digital company other than e-commerce. They're an incredible e-commerce company, and they're incredibly good at understanding culture in terms of the secondary markets for their shoes and the way they create pop-up stores. But I'm super bullish on Nike. China, just like Apple, it's not going to ramp. If there wasn't a China issue right now, the stock would be over 100, no problem. And so you're not going to, again, you got to look elsewhere right now because these stocks are going to mark time with the tariff issues. But mark my word, if this tariff stuff goes on forever, they're going to figure this shit out.
Yeah.
And they're going to figure out how to manufacture stuff elsewhere. But what Apple does well is partner with other big technology companies because of the size of their brand. And their e-commerce is fantastic. And this secondary market through StockX and GOAT, Apple's at the forefront of Nike. It's a generational brand. You hope that stock drops 25% so you can buy it.
Yeah, and right now Nike's forming a flat base. They've been trying to form, and they've been forming a number of bases during this volatile market. The latest one is a flat base here.
And most importantly here, it's Shoe Dog, best book that I've read in 20 years about business. It wasn't really a business book as much, it was a Bible. Nike went through this period as he got older. I think that, politically, you've got factions within that company. It's a huge company. Everybody thinks and he went and wrote that book, which is more like, hey, don't mess with this company, right? I'm handing down this book. We're talking about the early 20 years of this company when it was a $10 million business, and I was going to Japan and China to open factories. So put your politics aside within the company. I think it was a genius move by Phil Knight as he had as he got older and left this company, and he left a legacy to say, don't fuck up excuse my French, but respect the brand. We built this company. You're here because of us. Don't screw up this company. Yeah, and I think the stock's done very well in the last 3 years since that book dropped. And for a big company, I think that could be easily a $500 billion company.
And everything's about culture and brand, right? And always reminding and having that as the Bible.
There's no borders.
Right.
There's no borders. That's all we got left.
Right. So let's go to the third stock. And this is a younger company, but they've been around for a little while now, Lululemon. And they have carved their own, both in technology, but definitely fashion. They've carved their own niche.
Well, they've invented it, right? Everybody's copying them now, so that's important. I mean, it's riskier as everybody copies you, and your PE goes up or your multiples go up. It's not that there's no risk, but I've owned this stock forever. I feel like it's just in a world, and let's use the word leisure. But in a world, because I don't think of them as as much fashion as leisure, but in a world where people can now wear to work in a software world where they can wear T-shirts and kind of Lulu type ABC pants to work, they're in a perfect position. The products are light, so they make them easy to travel with. You can mix and match them like Geranimals. It's been run without a CEO for it. The founder isn't even there anymore, and they've managed to continue, which is really the one big worry that I have is they don't have that founder involved.
Right.
But at the same time, he's still a huge shareholder, and I think he's still kind of got a big pull on that company. And it's just such a great brand that it seems like almost anybody can run it right now. And then obviously expansion. The company is tiny. So Asia, Europe, they're just starting opening stores in Amsterdam. I mean, this company, no one knows the brand.
Yep. And now out of the three stocks that we've spoken so far, Lulu definitely has the best relative strength, the most constructive chart pattern here. Too. Yeah. Well, it's just a steady uptrend, so they're really fighting this market.
I own stocks for a while. Nike, if you're adding stocks today, Nike and Apple, I'm not saying to add them because of the China situation, but I've owned these stocks for a while. I'm not going to pay the taxes and sell them, and I'm trading around them. But yeah, but I have a lot of other ideas. But the fashology trend is something that everybody can understand.
Yep. So let's go to one more stock, and this is McDonald's. Why don't you talk about how technology has helped McDonald's?
Well, I think it was written up. We had this period where Domino's, if you look at Domino's for like 4 or 5 years, it was outperforming every tech stock because Domino's was a tech stock. Domino's really was an in-app experience. My son could be at the golf course, order a pizza on his Domino's app, and it would be he could triangulate it arriving at the house at the same time we got at the house, because they had their own built-in delivery service.
Yep.
But and McDonald's struggled, Chipotle struggled, all the fast food guys struggled. Then quietly, well, nobody understood it, along comes Postmates, Uber Eats, Lyft, DoorDash, and they're subsidizing. And the things that were most ordered on those things were Big Macs, and names that kids recognize. My son's ordering goddamn Big Macs on Uber Eats.
Yeah.
So what happened is, DoorDash and those became the delivery mechanism, and became, if you look at a chart of Domino's the last 2 years, it's gone down in a world where the others have gone up, because they have menu competition. So McDonald's, it makes sense that they are now benefiting from the VCs pouring hundreds of millions of dollars into delivery companies, which are just jacking McDonald's sales.
That's interesting, and it's been just a steady uptrend for McDonald's. Really low volatile.
Because it's so undervalued in a world where Domino's had that run, because McDonald's has way more distribution, a bigger menu, it's trusted. And they have 4 delivery companies bidding for that business. So it's really been a fascinating trend. So I think it's been, I've owned it since about 150, and it's a buy the dip type of stock, because it's massively undervalued in a technology world.
Yeah, and well, even if you go to a McDonald's restaurant right now, it's you have all the touch screens and all that stuff now, right? So they're even. I'm sorry?
I still like to order my food from a person.
Yeah.
So
but maybe not the kids.
It says tilt. I go to the screen and I can't even order a milkshake without crashing the machine. But I think the restaurants are cleaner. I think the food is better. I'm a huge McDonald's fan.
So those are 4 stocks. 3 of them were fashology stocks that are worth taking a look into during this volatile market. Remember, China's obviously had a huge impact on the first 3 stocks that we spoke about, but put them on your watch list, watch them, and then be there when a lot of this uncertainty is resolved. Thanks, Howard, for joining us today. It was great.
It was great. Thank you.
That's it for this week on Investing with IBD. Now, we are getting closer to football season, and next week we are going to bring Justin Nielsen back, Director of Research at IBD, and we're going to discuss the parallels between fantasy football and how we invest in the stock market. So that's it. I'm Arusha Pierce, and thanks for listening. And for this week's Nielsen charts, make sure to go to investors.com/podcast, where you'll find details for each episode in the podcast episode section.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.